Hi, good morning, everyone. Today is the 18th of January, sitting at the Stochastic Africa Dar es Salaam office live from Tanzania. We mentioned we're gonna be doing some back-to-back webinars, and then we have our seminar coming up on the 20th. So I'm gonna start off today's session, and before I go and do it, I want to start off with the dollar Canadian because apparently we had two back-to-back webinars, one for the European session and one again later on, hour 2 hours into the US session. And right before the Bank of Canada minister was coming on, so started discussing on the Canadian, and basically one of the moves was we intend to buy off 2400 zone and push it all the way to 25, 20th zone, and then uh, move back in, settle in. Basically, this is how it went in. I don't know. This is a 2 hour candle that I'm using, but see if it can be shown in the 5 minutes. Yeah, basically, this is where the buy points came in. This is where the news flash came in, and it took. This is a 5 minute candle, but in reality, it was pretty much just a 1 second, 2 second blip where it went and hit the numbers, and then it fell back, and then again came back retesting it almost, and then it's been flirting around. So basically, this is what I had on yesterday. Uh, Buy from here, and this was another point where in case if there was some extended move because of the news impact and the way it was coming in, and I did mention that dollar Canadian on the news, on his own news, can go a little bit out of hand and crazy, and you won't see it doing too much prior to it, but when it comes down on the news, it can do some wild, it can do some really wild moves, and that was something that we caught up live. Uh, the the bot, I mean, we had a clause for the sell also. Apparently, 2470 is the one that was the one that we were looking at. Apparently, could not trigger that out. It came pretty close to it. The shots were on the money. The longs were even better because that was like all you had to had an order buy and profit limit somewhere around here, and then you were done out there. And again, this was the resistance zone that I mentioned, so we wanted to go and sell from there. So you had a back-to-back trades, and the flashback again on the lower side, taking out this support and even extending this support to an extent was, again, this was all in matter of seconds, not even a minute. So you there was a buy, there was a sell, and again bigger better buys, which was mentioned 2360. So you pretty much only had an entry and a small blip for a fraction of a second before it just went back, and it was in healthy territories. So I'm going to start off again with the same pair. This is the move that was done yesterday on the dollar Canadian. It's one of those moves that you intend to catch probably, one in every 2 months, where you make a very, I won't even say decent amount of pip count, but I'm like exuberant amount of pip counts, and all that's getting done out in matters of seconds. And then for a news impact like that, having a position from where you hardly seeing any drawdowns, and catching a swing of 100 plus pips, this is of course for, yeah, for every reason, for a trader, it is immensely, how would I say, in a happy occasion, a reason to be jubilant, a reason to be happy, and a reason to be all smiling. I mean, like the way we were smiling out here in the office. And don't get us wrong, this was just one of the many trades that went on yesterday. So I just want to go and capitalize on the same trade, and there is no difference apart from the impact that the news did and how it got played out. And my whole structure is the same thing. That is this. I'm going to use what I used yesterday, so it becomes easier to go and explain also. This was a high impact zone, and the reason was basically, as I mentioned yesterday, this is where I feel that the breakout was done. So this is This is where I feel the baseline comes in as a support, and it's been acting on it as support. It's not just that the move was, I mean, the buys again once it got a hit down here at this point, and as you can see, it was just a blip. So the price back moved back up again the line, and then started respecting it. Here again, it flirted around, but then closed above, and then here it started going back in again. So the price is still in a layman's term, I would say the price is still stuck within this zone. That means either it needs to break under and head back like this, or it needs to break on the higher side. And I would assume somewhere around 2620, something in this fashion, most likely. Yeah, maybe all the way to 2660. So uh, this is what I feel, on the next move. So the downside still looks a bit limited, even if it's happening. Regardless, as this becomes again my buy points here, and I'll still be restructuring myself towards this move overall. But coming down to the point where we are right now, as of right now, again, any movement that I see it hitting down towards 2400 zone, I'll look for opportunities to buy, because as of right now, I'm shifting my gears into this possibility that we're gonna retest this, and then most likely we're gonna break. So this is where I'm tilting. As I mentioned yesterday, that uh, when you look at these setups, it's not a there's nothing verbatim out here that you have to do exactly what's been told. First of all, I'm not recommending any trade ideas. I'm only sharing trade ideas. So that means I would like you to see it, but in the end, I would like you to do your own due diligence. You might be, I mean, I'm using trendline analysis. You probably be using some other tools to conduct your technical analysis. So which is fine, as long as you get tuned in into the same mode, directional wise or flows wise, and you think that it is in line with what you're looking at, then be my guest. Because one thing I can tell you about the trade setup that I'm looking at and how I'm looking at it. But one thing I cannot tell you is how am I actually trading it, because it becomes a totally different scenario. It Because each and every trader is different from each other, and with that in mind, I control my risk differently. You might be controlling your risk differently. So with all that said, due diligence is very important. One of the I'm just gonna retrade where I did last time yesterday. I trade where I do not take a single position and take it to the single profit. What I do is that, let's say this is what I'm trading. This is where I wanted to go and buy. Say the price comes in and hits me on the buys, right? Let's say this is my target. So whatever amount I have invested in it, I'll probably be looking for something here, take a partial profit, here, take a partial profit, and then whatever is remaining, let it go all the way down here. But by the time I go and hit down a partial profit here, that's mean my stops are either one way or another break even. That's mean, if worst case scenario, if it market comes back and starts taking, let's say from here, starts coming down and then comes back here, it will hit me on my stop. Worst case scenario, I did not make any money, but at the same time, I did not lose any money. But or sometime when the markets are taking way too long and is consolidating heavily, then I've taken some profit here, and I'll just go and I put my stop on break even. So now if my stops are getting hit on the break even, I have made a little bit money because I've already done a partial profit, right? But then in case whatever happens later on, then I would not care about that. So that's my mental. That's my method of going, and how calculating my risk. Because if I have gotten into a position and it started making money for me, there is no way I want it to go and not to make money for me or to start showing me losses. One of the reasons is that I do not go and look for a single trade setup, or I do not go and trade a single pair in a day. I am heavily versatile. I look into on a good momentum day, I can be looking at 15, 17 different setup, placing my orders all over the places if I feel like. Of course, money management comes into the play, and that's a totally different aspect. Most of you would need to be there in the seminar to go and have a look at it. Anyways, I do not want to go and take all my time on a single pair or a single mentioning out. So let me go and do what I intend to do out here, and that is to conduct as many trade setups as possible. So yeah, this is the way I'm looking at it on the dollar Canadian, right? My technical aspect tells me that here, between here and here, there is a formation of baseline probably most likely has put in. So I'm just looking for opportunity for price to be coming close to it, and then start taking longs. And if I succeed, and then price probably takes about 2460 here, something like that, comes back, then I probably would be looking to add more into it till it breaks here. Then maybe if I'm still looking to add into the position, I'll wait for a swing and then I'll add back, and I'll probably going to continue till 2640, 2660. So that's my bigger picture into the pair, but that does not mean this is exactly how it can go or exactly how I'll end up doing it. Maybe I'll find some better pair that comes in that requires more of my focus, and I'll go into it. In the end, for the time of for the time that I'm sitting on, conducting my trades and looking into the markets, I like to have the most action for the time that I'm on. So if some other pair can provide a better action, better pip count, then why not? So there is no favorite. There is no I do not get confined, or I do not get caught up on one single angles or one single pair, and I keep an eye on as many pairs as I can. So just to let you know that setups are one thing, going and taking setup and going and trading it is a totally different scenario. One of the reasons that we expect people to come and join our training program here at Stochastic Africa is so that you can become better traders, and at the same time you should feel confident into what you're doing. And this is just one of the many aspects that we do out here. So with the Canadian done, I'm gonna go and start looking into other pairs. Euro is basically, this is the same thing again. Yesterday we caught a move down from here selling, and we wanted to go and do a minimum target of 2175. It came pretty close before it jumped back in again, hit back on the other resistance we had. So that's these again were selling points, and again. So the all the bigger picture, this is exactly the same thing that was there yesterday. I do not need to take much time on that, but that I still have an interest remaining to basically, that was a 30 minutes chart, and this is an 8 hours chart, and I I just feel that being on a longer term view, most likely, most likely it can still come back here, 21, 40, 44, 45, 40, well, 21, 40-ish, I would say. If it comes down and hits down here and starts showing me that it wants to go and hold it, I would be prompted to go and buy, maybe look for 70, 80, 90 pips moves. It can go all the way back up, but I'll stay cautious. I'll stay cautious. This is where I need to get cautious. So this is a small band of move that I'm looking at. This is exactly the same thing that I talked about yesterday. Not, it hasn't changed much. It did not do the kind of move that the pound did yesterday. So yeah, I still see an opportunity. Maybe I don't know if I want to go short, but any move down here, 2140-ish, and I see price wants to go and put on a holding footprints out there, I would like to go and try buys for 70, 80 pips initially, and then see how the momentum builds up, and would I like to carry or would I like to cash out. So yeah, this is the same thing. Bigger scenarios that if in case if it's breaking out, in case it's breaking out, then I would expect this move. Otherwise, there should be another attempt all the way back. And this is the most likely structure that is going to go and follow into. So, which means from here, if it drops in, sorry, from here, if it drops in and the buy succeeds, so this is probably the target initially, which is about 70, 80 pips. And if it breaks further, then I don't see it, any reason not going and hitting that one, hitting back on the top again. So this is the euro. Pound got freaky last night. This is the this is one of the charts that I had it on display maybe, oh, I can't remember, maybe 7, 8 months back. That, as I mentioned yesterday, between this black trend line and between this black trend line, I'm still seeing a case of a bear flag. So I think we were trading back at this time when I had this thing on. So yeah, the 36 15, 36.30 was a zone uh, back in October, September when it came in, that we know we went selling, and then this is we were able to capitalize on these moves, and then we just coming back on the same thing today, and that's where 38.40, 38.50 came in, and it broke, but it did not close under. So as of right now, it's an aggressive move. It's an aggressive move, but I think 38.50, 38.60. Uh, one have to be aggressive here. One have to go with an aggressive nature here on this pair to go. If you're looking to sell, obviously, I cannot negate to the point that or to the factor that overall scenario here is it's bullish on this pair, which is like basically on a buy mode. But I'll still go, and I'll still sense that, you know, since it was able to break comfortably on the higher side, it should have been able to go and close above this trend line. It did not, so which prompts me that there is a still strong case of a shorting scenario on this pair. So 38.50 around, give or take 10, 15 pips. Best way to do is reduce your, I mean, I would be looking to reduce my lot size and going and taking a shots, and most likely placing my stops above this. But here I'm probably going to be trying all the way down here below 3700, and most likely further down on the lower side. So this is, to me, is my argument is, it did take out and it did push in nicely above that. It should have closed on the higher side. So that's been, the close should have been somewhere around here. So today I would have been then looking for buys here like this. But since it is on the lower side, I would I would attempt sells, and these are the angles that I'm looking at, and then probably at least till around here, right under 3500. So these are some of the things that I'm probably looking into as of right now. Yeah, a strong case move on the pound, but I think this is a very viable setup that can be taken advantage of, at least on our end, and probably have to reduce the lot sizes to go and compensate for probably a bigger stop loss that I'm looking at. Uh, it's not one of those easy set out done trades. It is one of those trades where you really want the technicals to go and into the markets and announce their I'm here to stay, and then you need to try it out. So this is one of those case scenario, and exactly what we were looking at yesterday. So again, between 38.55, 38.60. This gives me an idea. I mean, this was yesterday's setup, uh, whole, and I mentioned that since this one is, in the evening session, I did mention on the pound that, even though it's tracking on our zones, but it's not pulling back, till here, and then maybe push on that. So, I mean, I was very clear that, this is one of those trades where where look for some small profits and or lock in, because the position where you were getting into, or where we were getting into, were at least prime, at least for the time frame, for the time moment that we were getting those position. It was still the top price one could have gotten. So, and of course, when it goes in like that, the danger of a breakout loom. So you need to. This is one of those trades setup where you can keep your stops really tight. So going with the same expression, this is what I think it can do. Probably do like this, and probably again do like this, and then either shoots back up or it needs to come down. And I am just assuming, yeah. What do you know? So 38, 55, maybe all the way to 65. That's still an area to go and sell for us on the pound. 37.75 around. So pretty much about 75, 80 pips initial target. May get a deflection here, and then hopefully this is the next move. And then to complete the move somewhere around here. So yeah, uh, now that I'm looking on 30 minutes, you can, even if you have, if even can be aggressive, maybe can put a tighter stop loss, maybe in this fashion. So stops right around here. So maybe, yeah, maybe 15, 20 pips stop loss from the entry, considering the entries around 38, 55, 38, 65, up to 65. So yeah, this still looks very good to me, because as in my defense, this breakout, this breakout here, this breakout here should have closed above. So, right now we should have been looking at this, but since it closed under and has been pinning the price down, I would, this is what I start looking into, with 37.75 being initial marker. So yeah, this is what the pound looks to me as of right now. And dollar yen, yeah, we were looking for dollar yen yesterday around 110.50 to go in for longs, and then at the same time, so 110.60 came in and it pushed in again. I'm kind of a neutral on this pair right now from this angles, but if I can get somewhere around, no, aggression tells me right now I should be buying into it, but I holds. Oh, yeah, maybe actually I'll look for 110, 110.75, 110, sorry, 110.80, 85. This is, you know, aggression tells me I should go and long here, but my peaceful mind right now is telling me I should wait. I should wait here, somewhere around 110.80, close to it, right? And then start seeing holding pattern. Then go to look for going long, because next time when we break our, we should go for 112.20. This is what we were looking at yesterday. So I'll still put this down as a target to come in. So maybe 110.80, 85, maybe even 110.90, depending, what kind of flows we are getting. So build a long position from here and try to take it down all the way here. So yeah, that's another angle that I'm looking at. And to have a better look on this pair, you have to, again, instead of me going and retrading each and everything, just have a look yesterday. And this was a reason that I was profound that we had a base forming in, and it's time to go long. It was just a matter of where to go and where to go and build the longs in. Apparently, we came in short 7-8 pairs, which is fine. We had a marvelous day. Other pairs came in, so if one bottom miss out, it's not a big deal. Anyways, uh, that's how with the dollar yen. I'm gonna go with the Aussie now. Yeah, this is yesterday I was looking at Aussie and I detailed out in that 79.25 under as soon as it closes under on a 2 for 2 hours or 4 hours or 8 hours time frame. I would like for it to go and start setting short because I was looking somewhere around 77, 75, magic 70, target somewhere around 77, 75. I'm still of the same view, and uh, I was doing a little bit more charting, and I came across that uh, this probably most likely has been done out. So Aussie, I am shifting my gears on the lower side on it. So basically, what I'm saying is that yesterday this could have been the top of zone. So the only question is that will it go and hit back here again? Most likely not. So anything close to 8,000 here, I think one can try to go and see if it's finding good resistance at this zone, then try to go in for a shot because I think we these are the moves that we are looking into, and at least till here, or all the way down here. So this is the move that I'm looking into. Unless dollar gets really beat up, another scenario is that it just shoots on the higher side. So it's just a matter of where you want to go and take a position shot on it. But I think the best thing would be if you have a sales position on this pair before it drops under 79.25. I think that's a position that probably can hold on for days to a week. So there's this potential on this pair, and yeah, that's the 79.25 again. So I mean, I would try. I will see any holding out around 8,000 handle. That would be my good cue to go short. And actually, yeah, this probably is. This probably is. This probably is. Yeah, this probably is. The window of opportunity may have just come and gone. Probably, most likely. So this, or maybe up to here, which is pretty much in line. It's almost the same thing. And the zone to go short and hit down here, then these zones. So I'm just looking at here, and 79.25 would be a trigger again, somewhere around here. So yeah, I mean, this is ready to go short. From my point of view, anything between here and here, it's yeah, I would try it. I would go in for shots. I would go in for shots. So I want to jump down to. We were looking at pound NZD, and I want to see how it is going right now. So nothing much has changed because most of the pairs we did yesterday, and yeah, all right, good. Pound NZD, it played down perfectly well. This was the area to go and buy. So we had the buys first, and I remember we had the buy second time, and again today also you got to buy. So this is a strong trend line. Uh, it did 100 plus pip bounce, and I think we had a target around 90, 70. Initially, the bigger one was on the higher side. I'm not going to discuss that. More than welcome to go and see the yesterday webinars. It should be available on the website Stochastic Africa. And again, it's the same thing. Again, it's coming down here and is building in base. So as long as we are holding above here, the direction is still a bit on the long side. Uh, I'll see the camera formation for the 8 hours, how it is looking. Yeah, it's flirting. 8 hours probably suggesting that. Yeah, 8 hours probably suggesting that could find difficulties on the higher side. So as long as we stay here, we can take in small buys. And of course, the best trade idea here would be to small pips at least be amending your stop because the structural flow of the candles we can probably see a breakout underneath. So with that in mind, with that in mind, be cautious. Be cautious if you're still interested in this pair. Be cautious. Uh, 4 hours still healthy for longs, but 8 hours turning around the last candle. Uh, so that's prompting that probably can go and start dipping on the lower side. Probably can come down all the way to 8,800. So that could be a drop of 140, sorry, 150, 160 pips. So yeah, uh, better to go short, if it breaking than to stay long. So this is one of those trades where I would recommend caution. Pound Aussie was there yesterday. We were looking to go long. We had an idea to go and sell from here, which was decent enough. Apparently, we wanted to go at least 72.60, if not 72.40, to go and build long, and pretty much around here was the target initially, our target. So yeah, that thing came in. Basically, this is what we were looking into: build longs and then hit back around this area, which it did. But as of right now, I think I'll stay a bit neutral on this pair, unless because I looked into the pound NZD, and actually 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 I think pound NZD will be dropping in, and so will be the pound Aussie now. So that would mean we can go and hit somewhere around 7,200 levels. So basically now, uh, this is one of those trades where you have to show aggression. If somebody cannot show aggression, probably they will miss the boat. But I think the move is coming, and it's probably going to come in soon. That we're going to go and hit all the way down here. So I think 7,200 will come in, and next structure move here. So this is going to be a lot of back forth, back and forth, back and forth, back and forth move. This is going to be back and forth move, but I think the direction is still on the higher side, that we're going to go and play 7600. That's what I think so far as of right now. But initially, short term move, I think we can see a dip all the way down to 7200. So maybe you can use the top out here on the 4 hour, the last swing highs, uh, has, anything above that stop loss. And I think aggression suggests it's a shorting paradise as of right now. Again, one of those matter where if you're interested and you're aggressive in nature, you don't have to go and play with your full lot sizes. You can always reduce down your size, because the question that you need to ask is that, if you got like seven, eight, or five, four or five, or even two or three different trades that's coming up, would you be putting all your eggs in the same basket, or would you like to diversify? By here, diversification, I mean, you need to reduce your lot size in such a way that you can play a pair for maybe 40, 50, 60, 80, or 100 pips. You cannot play other pairs for 20 pips, 15 pips, 10 pips, even 5 pips if you have to. And then you keep on getting in, getting out if required, if that's your trading style. And then keep certain pairs where you want to go and see a full run onto them. So that's a different way of trading. I mean, of course, as I mentioned, most of the traders, they do not know what type of traders they are. They in my category, they become, jack of all and master of none. You rather be master of one than, jack of all. So with that idea, get equip yourself with something that really works for you. It may need not to be a trend line analysis. It may need not to be XYZ, or ABC. Is whatever you comfortable with. So here, coming down here, most likely this is my view now, going on pound Aussie. That is anything around, I would say, close to 73.70, and I see it's holding. uh, you know, I would try to, I would like to go and try take some shots in, basically, that if we go here and start holding here, I would like to build, start holding here. I like to go and try shots before that breakout point, and then hit down. Actually, the target would come somewhere around 7,200 and then go build long. So yeah, that's the trade idea on pound Aussie for right now. In gold, we've seen a lot of action yesterday. That means we could have some dull moves today. So, but still, we'll see. How things fold up. Okay, yeah, this is a trade that I mentioned yesterday. That was to I was looking for it to go and start falling and probably coming down for 13.10, 13.12. So idea was to set shots underneath. So those who have gotten into shots good enough. Otherwise, you can still use the swing back up, maybe 13.32, 33, or whatever the number that comes in out here to go and see if the price starts holding. Then there's still an opportunity to go short, which is the trade idea was I was I was not looking more on the higher side. That's mean look for if aggressive, these were the shorting zones anyways, right? If aggressive, otherwise to set shorts underneath. This was a trade idea. Like once we're under, we should hit this. So right now, right now, right now, it broken under, form a base. It should go and hit all the way back here, and then starts holding like this. Starts holding. Then this is the move that needs to come in. And then here, if there's a bigger long coming, and then this is the one it is. But if it starts falling under, then again, the gold has been consolidating for a long time. So it just might just go and continue doing the same thing. But it's been an impressive run on the gold. And even on Stochastic Africa, we did mention the gold. We was trading somewhere around 1290 when we had this idea to go and sell for all the way here and then build back longs. And our target was up to 1320, but this is exceeding it. So, anyways, this is how it is looking. And again, maybe you can use what I'm suggesting is that seeing like here this move. So from here it goes maybe till here, and then this is the next move here, and then maybe all the way here. So then we will see either we have a head and shoulder and drop and come back all the way. But that's a different story for another day, for another time. I don't want to get confused. I don't want to confuse people out here. So, and sometimes I forget that I might be having a different kind of an audience. Anyways, keep it to the basic. You have these points to go and take advantage of. So probably better you go this way. That is here up to 1335. Start seeing it showing a holding, then drop it, and then slightly at least buy till here. So yeah, this is still a valid point, and this is what I'm looking on gold. And again, I'm keeping it a bit on a short time frame. I mean, like on a short term. So let's see what we have on S&P. Yeah, I just touched base on S&P that I wanted it to go and drop a bit more for it to buy out. But still, anyways, this is still the resistance zone, but I'm getting tired and weary of it. Still, we will be looking. This was the idea, 2760 somewhere around here on this line. We look for buy. So still 2760 is still, here, the aggression and people, especially those who are into patterns and everything. This clue is for them that we might be having a case of triple tops here, So you can keep an eye on that one top, two top, maybe the third top out here, so we can still do this move, right? So it's more of a selling opportunity here than anything. But then as I've been telling every time on the stocks, these are one of those no-brainers. Uh, this has been a no-brainers lately. That is, no matter what they show, they might be showing you left and they end up going on the right side. They might show you south and go to north. So the the what I'm trying to say is that no matter what happens, these things are getting bid out. These things have been getting bid out for the last couple of years. So yeah, but that does not stop me, or that should not stop you from taking you know a temporary phase out, a small correction, deeper correction. We of course we would like, but even a small correction, then as long as it's making you money, it's not. It's why it shouldn't be. So this is basically for those who are into pattern, and if they can sense that there's a triple top formation coming into it, they can go and try to take an opportunity out of it. I'm a bit on a neutral side. I would still look for 2760ish market coming down here, start showing me hold, then probably I've got no problem going in for long, because that's the way it has been going. It's not. I don't need to be right. I don't need to be wrong. It's just that sometimes it's much more easier to go and just be a part of the price action and the flows of the market than just try to go and counter it. So that's what my idea is on the trade setup. And one more thing I would like to mention here is that though we do a lot of trade setup, there are some time where we do not find a single entry into the market. We might be having 15 different layouts ready for the day, and then it just becomes a slow, painful moving day that nothing triggers in. So yesterday, as I mentioned, our pipcon probably, I don't know, somebody had bid. It's much better. Some neutral party or third party does conduct analysis on that. But our fair count was that we stochastic Africa probably put in about 400 plus on a pip count easily. But taking care of all the swings that were mentioned, and probably about 600 plus. But then uh, let's keep it to a modest 400 plus. It was a good day regardless. Pretty much each and every trade that we picked up, there was money to be made. uh, Trades like pound yen that came in, and then it broke. It basically it broke on the higher side. 152.90 supposed to sell around, right around. These were the number that came in right here, right here. The entry was exactly on the top notch. The only thing is that it was only making about 15, 20 pips in gain before it started, before it got on wild on the pound. So yeah, again, and before it happened, I was here back in here for the for the US session, evening webinar, and then I did mention that this is where the strategy of, I was mentioning earlier, that to take part profit, amend your stop. So it comes in very handy in situation like there where you were making like 25, 30 pips in a gain, still a decent amount of money. Most of the traders, to be very honest, they do not, if they can make 10 pips on an average a day, or let's say even 150 pips in a whole month, they consider themselves lucky. So with that thing in mind, every pip needs to be protected. And one of the best thing that you can do is adopt a strategy, make a mind frame, go with a view that once you're in the money, you should never lose. If you get into a proposition within yourself that once your trade goes into the money, making money, then you should not lose back that money. Basically you need to keep it distance, and a difference between trading and then gambling. I would say gambling is let me ride, let it ride, and I don't care this and that. But it should be taken. It should be dealt differently, because if you want to be consistent and if you want to be a successful story in the future, the best, one of the things that can help you and make you go further up, that would be your money management, that would be your discipline, that would be holding up on your emotions. A lot of things, we will discuss this in the seminar. So these are good trades in a trader. So if you can adopt those right now while you're building yourself into these markets, it would go a very long distance. It would be the distance for you to be here in the market next 2 years, 3 years, 10 years, 20 years, and you not been there. So this is how important it is. And again, you need to know what type of trader you are, and come down over the seminar, and we'll have a lot of discussion out there. So for the webinar, let's keep it to the basic. I was looking the same pair to go and look for buys somewhere around the lower side, and our target was around 150, 155. Sorry, 150, close to 155. So apparently, this is the move that's coming into it, but it's too late for us now to get into. I'm not going to get myself involved with the position that is flirting around on main point and up and down. So I'm just going to stay away from it. But if it comes down, one, this is the thing that was interesting at yesterday. If it comes down between 155 10, 155 20, 25, and I see holding, that's where my interest comes in. So I'm just gonna take my time and not do anything on this pair. But if I see it somewhere around here, I would like to try some shots. So that's it on it. And what else can we? Probably let's look at the pound Canadian. Okay, this is something I mentioned. Structure of a diamond and then the structure of a diamond. But this was you know, this was a better looking diamond out here, because if I take this out, yeah, then it becomes a bigger time frame. And diamond formation is basically, I don't want to go get into pattern, but it's a pattern which basically indicates that market reversals are here. So with the reversal on view, this shooting on the higher side would be on the lower side. So anyways, it came back, and then yesterday I think it hit back and hit back on the resistance, hit back on a prime resistance. So that would have been a good area to sell. So this has got a same trade idea as a probably pound Aussie, that is, to sell and probably sell all the way down to 16,900. So about 200-300 pips on the drop. But then the question comes in where you can go and enter into the market. Let's see if we can find something. Uh, let's see if we can find something on 30 minutes. Yeah, it's a consolidated phase. So uh, yeah, I think the time has already come and gone. So just like the pound Aussie, just like I think other few, even just like the pound itself, I think 72.40 around. This is a zone we can look into. Uh, but again, you got pound Canadian, you got pound NZD, you got pound Aussie. So my advice is that if you're going same direction on one class asset, right, then it's better to go into one. Or if you want to go in a couple of them, then at least you need to set up your margin in such a way, or your lot size in such a way, that you can compensate for each other. That means, do not take full positions. If you're taking on all of these pairs, divide your position in such a way that, it should not, in case if it goes other way around, you think about, if it goes other way around, then, instead of handling one position and managing it, you have two or three different positions on the same direction, on the same pair, that's going against you. It becomes difficult for you to manage also. So that's again where the money management comes in. But again, I'm talking about trade setups around 72.40 or 72.35.40 still is a zone. If it starts showing holding, I think there's a clause that we can start moving down. So probably about 71.20 being your first target, and then subsequently later on the lower side. So yeah, it's got pretty much the same, excuse me, structure as the, it's got the same structure as the pound Aussie was showing. So yeah, 71.20 would be good initially target, and then probably all the way down to 6,900. Yeah, I think that should be it for today. And please drop in your comments. Let us know how you feel about the webinars. Uh, lucky to come down for the live seminar that we're gonna be having on the 20th of Jan, and you can always inquire in from our website for more details. People are here to help you out. So, any questions for me personally or for Stochastic Africa, do let us know in your comment boxes. And like you to have a good and prosperous day. It's been a beautiful day out here. So, stay safe and stay blessed. And I'll see you tomorrow. Take care.